What's going on, guys? Welcome to the Hustle or Stay Basic channel, the Invest or Stay Basic segment. I'm your host, KG, at KG the Hustler on Instagram and Twitter. And today I got a video on one of the biggest precious metal mergers that's going on right now. And why that's important to me in particular is it's involves my biggest holding, Kirkland Lake Gold. And I know there's a lot of people who watch this channel that are either bullish on gold or have a holding Kirkland Lake Gold, or just want to know about things that are going on in the markets. If you like these kinds of videos, like it, subscribe to the channel. So let's get into what this merger is all about. So it was announced on September 28th, and on that day I was just like, just gonna add 2 new holdings to my portfolio, and I did a video on it. That was actually my last video, and all of a sudden I see this headline: Agnico Eagle and Kirkland Lake Gold announced merger of equals to create highest quality senior gold producer. And I was like, whoa, this is massive news, because like I shared before, this is my biggest holding, Kirkland Lake Gold. So before we, get all confused with what's going on, let's start with the very basics. Let's find out a little bit about the companies involved in this merger. Okay, starting with Kirkland Lake Gold. Listen, I got 3 videos talking about Kirkland Lake Gold. Clearly, you guys know I'm a fan of the company. I highly recommend, if you don't know anything about Kirkland Lake Gold, check out one of these 3 videos that I've put out. Basically, what you need to know about Kirkland Lake Gold is they are a gold miner with some mines in Canada, one in Australia. They are always trying to return value to their shareholders, have an excellent balance sheet, just a really well-run company. So I'm just going to summarize it at that. Go check out those videos if you don't know anything about or much about Kirkland Lake Gold. Moving on to Agnico Eagle. Who are they? Well, Agnico Eagle's Mines Limited, ticker symbol AEM, trades for $71 per share at the time of this recording. It's a $17.4 billion market cap, Canadian obviously here. 2.5% dividend yield. They have 9 operating mines located in Canada, Finland, and Mexico. I believe they have 1 in Finland, 3 in Mexico, and the rest in Canada. As far as gold production, they produce approximately 1.74 million ounces in 2020, and they're hoping to produce, prior to the merger, 2.15 million ounces by 2024. Sales and earning wise, they did above $3 billion in 2020 with over $500 million of earnings. And there's this little thing they have here in their investor relations section, just showing that since 1998, they've outperformed the S&P 500, spot gold, and other gold indices. So 11.96% annual return since 98. So pretty good performing or well performing stock. Something that's very important if you are investing in these gold miners is knowing the all-in sustained cost. That is the cost to get 1 ounce of gold out the door. For AEM, we have the range of $950 to $1,000 per ounce. And if you don't know anything about gold, you might be like, hey, that sounds a lot for an ounce of gold. Gold is currently, I think, just under $1,800 an ounce. So they're making about $800 per ounce of gold they sell. So they have a really good profit margin. Not as good as Kirkland Lake Gold. But yeah, and I also threw in the balance sheet here. Not the greatest balance sheet, $280 million in cash and about almost $2 billion in debt. But, I'll get into that maybe later in the video. So what is the transaction? Like, what is this merger that's happening? Okay, so the 2 things that you need to know before we even get into this is Sean Boyd is Agnico Eagle CEO and Tony McCooch is Kirkland Lake CEO. And basically they started talking about, doing a merger about 2 years ago. Sean Boyd's, big thing that he highlighted was he did not want to pay a premium. And I'll get into the paying a premium thing a little bit later in this video. And Tony McCooch said, hey, like by having this merger, we'd be exposed to more areas outside of Canada. That would be pretty cool or beneficial for Kirkland Lake Gold. So that was kind of some of the things they discussed prior to the merger. Now, early in that headline I shared, you saw merger of equals. You might be thinking, what does that mean? So let me just read out this definition for you guys. Merger of equals is typically only invoked in all stock deals, which this is an all stock deal. Little or no premium is paid. There was no premium paid. I'll leave it at that. Management teams are often assured they will get a chance to stay at the combined company, and shareholders split the pie as close to 50-50. So there are some members of the Kirkland Lake Gold board directors staying on, including Tony McCooch. Some examples of recent mergers is Newmont Corp's takeover of Gold Corp in 2019, which they paid a 17% premium, and Kirkland Lake's purchase of Detour Gold Corp later that year, which came at about a 24% premium. So the total stock deal is worth 13.5 billion Canadian, or 10.68 billion US. And I'll get into what the stock deal kind of looks like. I just want to jump into what this means for existing Kirkland Lake shareholders, because I'm sure, if you're watching this video, this is probably what the information you're looking for. So if you're an existing Kirkland Lake shareholder, you would get 0.7935 of an Agnico Eagle share for each Kirkland Lake share that you hold. So for example, if I had 10,000 Kirkland Lake shares, I would get 7,935 AEM shares. I'm not too sure what that would look like if you own less than 10,000. I think it's based probably on your investing platform, whether they would give you fractional shares. Not too sure on that. Let me know in the comments below if you know how that works. So after the merger, we would have a $24 billion market cap company in which 46% of all shares would be owned by Kirkland Lake shareholders. So, in that previous slide, they said as close to 50-50 as possible. Looks like 54% of the company will be owned by AEM, or the old AEM, you can say, and 46% would be owned by Kirkland Lake shareholders. Just to stay positive, let's go take a look at the pros of this deal. There are pros. Come on, be positive, guys. If the merger goes through, when these companies combine, what are the pros for this company going forward? Number one, you remember me mentioning the all-in sustained costs, or AISC earlier in this video. The new AEM, which we're going to call that merged company, will have the lowest AISC. Oh my God, I can't even say that. The newest AISC out of all gold miners. So $905, which is insane. That's a really low number. So that's awesome. They'd be in the top 3 of market capitalizations. Wow, I can't speak today. But they'd be in the top 3 of market capitalizations for all gold miners publicly traded. And, they'll be relatively safe because majority of their gold is coming from Canada. They would be the biggest gold miner in Canada by far. You can see this little graph here. And, Canada's pretty safe. They're a safe country, not too much political tension. So it's actually really good that they have most of their gold coming from Canada. Another thing that's awesome about this deal is both of these companies were aggressive, like way more aggressive than other gold mining companies in the past. So combined, you can just imagine they won't be competing against each other. They could kind of work together and be even more aggressive in acquiring more gold reserves. I have this little chart here. Since 2011, you think of how much their gold reserves have grown. This is Kirkland Lake Gold and AEM combined, 127%. Whereas you look at some of these other companies, like Barrick is down 51%, Kinross is down 52%. So this company could be a fast growing gold mining company. So that's really exciting. Okay, so let's jump into the cons of the deal, because there are definitely some cons for you if you are a Kirkland Lake shareholder today. Okay, so short term, we got screwed, man. There's no way of sugarcoating it. Kirkland Lake shareholders, existing Kirkland Lake shareholders, we got screwed. We had the better balance sheet. We had tons of shareholder return via stock buybacks. And personally, I believe this company, if gold hits $2,000 an ounce, is a $70 per share company, Canadian, of course. And for us to be bought or merged at $50, it's a kick in the balls. We did get the short stick of the straw. Most were hoping to be bought out at a premium. Like I've been reading a lot of forums with Kirkland Lake Gold, and a lot of shareholders were like, hey, maybe we'll get bought out by Newmont or Barrick. But it was a merger, not an acquisition. And I think that also plays a big part to the premium. If we're merging, I will get into that later in this video, but if we're merging, it's actually beneficial for the company not to pay a premium. But kind of wish that Kirkland got acquired by Barrick, so we got some awesome premium deal, but it is what it is. As for timing, if this deal does go through, you got the shareholder meeting in November, and it's expected to close. The merger is expected to close somewhere around the end of the year or early next year. Here are my final thoughts. This deal absolutely sucks for Kirkland Lake shareholders short term. But, and this is a big but, I think this could be awesome long term. And when you're thinking about investing, I mean, you're always thinking long term, or you should be. I think this deal is going to be awesome for me long term because Tony, I have this little blurb here. Tony, what I think, Tony McCooch swallowed his pride and said, you know what, I'll take a merger of equals just so we can stop competing with each other and become a gold giant, a Canadian gold giant, and maybe a world gold giant. And I really think that's possible with this management team. AEM is super aggressive. Kirkland Lake was super aggressive. They can work out synergies to lower their all-in sustained costs even more. They can have huge cash flows coming in a gold bull run, which they can use to increase their dividends. Awesome for me. Increase share buybacks. Awesome for me. Acquire smaller mines, more gold reserves. These are all awesome things. There's a little screenshot I took here from a Goldman Sachs analyst, and basically he said, if there's a continuing global recovery and moderate inflation, we're looking at gold prices of at least $2,000 per ounce. And if there's a slowing of global recovery and higher inflation, we're looking $2,500. And I honestly think we could be around that range. I don't know. A lot of people tell me I'm crazy and I should be buying Bitcoin and all that kind of stuff. But hey, I believe in gold. I believe in these gold miners. This is definitely a long-term hold. I'm just going to suck it up and be like, hey, I could have made a lot more money with Kirkland Lake Gold had Tony McCooch, asked for a premium. But in the long run, I think this deal is going to work out really well in my favor. Let me know in the comments below if you're selling your shares. What are you doing? Why are you doing it? And if you enjoyed this video, like the video, subscribe to the channel if you're new to the channel, or you just haven't. I don't know why you wouldn't subscribe. If you're watching this, come on, subscribe. And I'll catch you guys next time. See ya. Bye.